Barry Knapp of Ironsides Macroeconomics joining us from Vail, Colorado. Thank you so much for rejoining the Contrarian Investor Podcast today. You are the traditional curtain raiser, or have become that, for the outlook for the calendar year. I guess the first question is recession, yes or no, painful, how much, and when? Those are some questions.
I'll begin when you ask the question about recession with this idea that it's phrased and responded to far too generically, as if all recessions are similar. And quite frankly, the last four, if we include the pandemic, at least initially, were significant credit contractions, even balance sheet recessions. When you contrast it with the recession in 1970, the very deep recession in 73, 74, 1980 recession, or 81, 82, when I began studying economics, those occurred during inflationary periods. And the key point of differentiation between those recessions and the ones that followed, including the pandemic recession, was that nominal GDP did not contract during those recessions. It continued to rise. Earnings, of course, are nominal. And so the earnings contractions, even in that deep 73, 75, and 81, 82, very deep Volcker recession, were only 13% declines in S&P 500 earnings. The other two were less than that. As a consequence of this likelihood that nominal GDP will not contract, even if we do have something that the NBER ends up qualifying or characterizing as a recession, I would characterize or estimate that earnings downside is limited to 5% or so, which is about how much it went down in 1980. And that's a very differentiated point of view. I don't actually think earnings are going to go down next year. I think they're actually going to go up. Wow. Because we've already weathered the marginal cost, marginal revenue, input output storm.
Well, that's a contrarian view right there. You should have led with that.